Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Camille Cregi on the line, and he is Managing Director over at CMK Capital. And this episode is part of our Super Return Berlin series, where we bring you the best of those that attended and participated at Super Return, which took place in Berlin. Camille, welcome to the show.
Thank you. Thanks a lot for having me.
All right, so we have a lot to talk about here today. So, of course, I want to get into CMK Capital and the work that you're doing and talk about a quantitative approach to short-dated receivables to minimize risk. So, super interesting topic, and really also what you're doing really to bring the fintech approach to financing fintech. So, there's a lot of F's in that one, Camille. We're gonna have some fun. But to get us kicked off here, Super Return Berlin. Tell me about your experience. Have you been in the past, or is this your first time? Give me some of the backstory, please.
That was my first time, but that was definitely very interesting. So many people, and I was just a few days, so many connections. It's great both to potentially look for new LPs for us, and as well as seeing what's happening in the industries and all of us. So that's definitely an awesome experience. Definitely
Mm.
looking to go back. It was my first time, but I've been to other conferences in different part of the world as well. So,
Mm.
but that was definitely a good one.
What do you think, for those that couldn't attend, what do you think makes this one slightly different or slightly unique? What stood out to you?
I think it's a little bit larger than some others. I mean, there's been five,
It's
six
pretty
thousand people
big. You're
attend.
right. Go ahead, please. It's big.
So that's definitely something that stood up. It's not a few hundred people, so it's like a large crowd. I
Mm.
mean, there's so many sort of like GP presence, so it's definitely like driving a lot of people coming because effectively, like you got everybody in the same room. So that's one. But of course, after you have to sort of, it's a matter of matchmaking. It's not because you got so many people in the room that like there's a lot for you. It depends how you manage to, get out in front of my people and get the message across. And that's a lot
Mm.
of fine tuning in that sense and matchmaking.
Yeah. Before we go further, talk to me about CMK Capital. So maybe start with giving us a little bit of background on the firm.
Yeah, of course, we are a private credit fund. So what we mostly finance is short-term commercial operations. So that will be delivery, productions, inventory, salary advance. So short-term cycles. And the way we do it is we finance through different sort of fintech or platform that will finance those short-term receivables. So that's essentially how that works. And that's the intermediary part. And so we look at it portfolio or bench of receivables in that sense.
Mm. How did you get into, I mean, I could look at this two different ways, either finance or even just this niche. How did you get into this?
Well, my background was mostly one of operator, meaning I started to work in fintech in 2012. We're all young, but it's been a few
That
years.
that's
And
pretty early. That's pretty early. 2012. That's early. For fintech, I
um,
mean specifically, right?
yeah, it was not called fintech at the time, but it was
Hmm.
like sort of different sort of payment operator that was sort of doing new things at the time. It was alternative to remittance instead of cash payments to do like different form of bill payments and other stuff,
Hmm.
building APIs and different integration with different people. So that was a different time, but effectively different iterations, a lot of things. I created my own sort of startup fintech. I worked in structured credit for DB Asian Development Bank when I was in Asia. And so that give another perspective, more institutional in terms of how do you structure different financing for different sort of banks and institutional. And that's essentially how I walk through like the different part of payment, credit, and different
Mm.
form of financing or asset back structure.
Mm.
That's been like the structure. And then I returned back to Europe during COVID. And that's when I started the fund in Europe, mostly having a Europe capital base and
Mm.
investing in Asia.
So it sounds like you've kind of always been entrepreneurial. Am I off on that or?
So that's completely true. I
Yeah.
started my first company when I was back in college. I was just 20. So effectively, it's been a few years.
And the reason I ask that and bring that up is because there's obviously a reason why you pursued this niche, right? Lot as an entrepreneur, a lot of different things you could have done with your skill set and otherwise. Where did you see the opportunity in this specifically in this niche?
Something behind it, like the niche is still estimated to be about like $40 billion that is
Mhm.
financed globally. And BCG estimate there's about $280 billion that is unaddressed financing there. So
Mm.
it's small, but like there's still some room to play.
There's definitely room to play there, Camille. I get it. No, go ahead.
But it's like if you talk about different asset management, like the,
Mm.
the scale is so big that like you got a little niche for you, but it's just like you're not alone and it's totally fine.
Mm.
So getting more in details is like it was definitely the type of winter you got across when you got basically a little bit more experience in one field where you see different gaps in different ways, but effectively we're able to address it because we get effectively that understanding of what a fintech is, how they operate, and how we can sort of plug in to get all the data to understand sort of the cash flow and get that sort of finance properly. So that's that part. And the second part is to effectively have a proper sort of a structuring around it in terms of how do you appeal to the right LPs and get sort of that experience across to raise the fund. So that's the
Mm,
two part in terms of both being an operator, a tech play in terms of understanding the risk, and also appealing to a different sort of like set of investors to raise the fund.
mm. Talk to me about exposure and geography in this. Like, are there particular areas that you're targeting?
Yeah, based on my experience, effectively, we mostly finance a fintech platform in Southeast Asia. So the key interest in the region is that like it's pretty large. You got 650 million people living across the region. The growth is still strong, close to 5% per annum. So it's still going like quite much faster than Europe and the US. So effectively, that's quite a good sort of moment. And you got also like a region that is less affected by the different sort of geopolitical shock because effectively it's not aligned to the US or China directly. So it tends to allow for its own and having a plus factor of people divesting from China and investing more in Vietnam or some other part of the region. So effectively, you got a strong sort of like regional play and also inflation that tends to be a bit lower than other places with sort of a lot of communities as well in Malaysia and Indonesia and globally something that tends to be quite well managed and from a macro
Mm,
perspective.
mm,
So that's what is interesting from a sort of macro perspective. And then effectively in credits, what you look at is mostly growth in the sense that like it may sound dumb, but if your borrowers are effectively making more money tomorrow, they're more likely to repay you.
mm,
So essentially it's the strongest correlation we got to default. It is effectively a growth in a given sectors. So effectively, if you deep in sort of like trade in different ways, so retail
hmm.
sales and so on, it matters what's the growth in there, or if you're in constructions and automotive and different sectors there. So
Mm.
that's what matters in that sense to get the low risk that we're expecting.
Talk to me about deal flow and also like evaluating deals to the point to where you at some point decide to deploy capital. Like, talk to me about what that looks like.
Well, this first part of the deal flow was actually coming. I've lived 9 years in the region.
Hmm.
So still 60% of the deal flow today is entrepreneur referring us others. That's the depth of the deal flow and how we get access to the right information and the right deals
Interesting.
in
Go ahead.
front. And that's the quality of the network and how you effectively are close to the founders, give feedback in a sort of appropriate fashions and like try to be helpful in through the different interactions we got. So a lot of it is still a people business in that regards. So that's one thing. The second part is also by having sort of a good sort of relationship with stage VC that will finance them in equity while we come in debt. So
Mm,
effectively, it's a matter of sharing notes with them about the deals we do, the deals that they could do at the next round of financing. So there's a lot of synergies. Basically, we leverage up the deals they do, so it's kind of free money for them. But on the
yeah.
other side, like having more equity for like a fintech or platform, make them also more bankable. So it
Yeah.
goes both way in that sense. So those are like the two kind of key source. And the third is also payment players because they obviously get incentive for volume. So if there's more volume, there's more business
Hmm.
for them. So they like to have more credit through the system.
Yeah. What kind of duration are we talking on these type of deals? Like, what is there ranges or?
So the underlining tend to be about 60 days long. So
Hmm.
that could be trade finance and there could be productions like raw materials to produce specialized equipments in manufacturing or
Hmm.
different sort of installation for like downstream mining. Or you have like also inventory. So that could be car dealers financing, buying and selling second-hand cars, the inventory on the car dealer lot, or that could be different type of sort of inventory in that sense. And then you have the salary advance. So that would be an employee taking sort of like a wage access, like half his salary by the 15th of the month, and the employer sort of paying by the end of the month. So that tend to
So,
be well-defined sort of cash flow. So you know
yeah.
exactly there's one sort of disbursement, one repayment, and then you can have a quantitative approach in the sense that like it's completely sort of black and white, meaning it's
Mm,
repaid or not repaid. It's not like payment in kind, fancy thing.
yeah. Yeah.
It's like as it is.
Yeah, I like things like that. It's as it is. And it seems like, correct me if I'm off here, for certain clients, then there's potential for repeat business, right? Like in terms of growth and otherwise with certain clients and borrowers. Is that accurate?
Yes, that's what we love, and that's why the risk is low. Because
Yeah.
effectively, if you want to get like a constant delivery, you bill, because otherwise the
Yeah.
supply is not
And
longer
they're
going to
growing,
be there.
and
If you
based off of your premise in the first place that you mentioned that they have to be growing, right, or making more money than they now than they did in the past, then it should continue in that same direction. Am I off on that? Like, I want to make sure I understand.
Yes, that's totally right. And the idea is that, like, even if the rate is a bit high, effectively, that
Mm-hmm.
at the end of the day, the SME or the buyers will make like 20% sort of gross margin. So they pay maybe 5% financial charge on like 60 days. So that may be annually like a bit high, but it makes sense for the borrowers in the sense that they do make money from every single operation. And that's
Mm,
how it gets repeated, because if you burn people, they're not going to come back. So you need to
yeah.
make sure that they actually make more money after, like, and that's how everything is sustainable.
That's wonderful. Camille, it's been great having you on the show today. Really enjoyed learning more about CMK Capital. If somebody's listening or watching this and if they want to follow up and they want to connect, how do they do that?
My LinkedIn is a good way to connect. My full name, that's where you find me. Otherwise, directly at my email, camille at cmk.capital.
Wonderful. And for everybody listening, just so you know, we'll definitely put some links in the show notes so you can just click on the links and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So hit that subscribe or follow button. And Camille, thanks again for coming on the show.
Thanks a lot for having me. It was a pleasure.